was a little bit unique in that I was kind of coming at syndication from an impact perspective. Like real estate on its own doesn't really excite me that much. But if I can figure out a way to make money from real estate and decarbonize real estate, like that for me is really interesting.
Welcome back to another episode. Today, we have a guest whose work stands at the intersection of finance, technology, and environmental impact. Owen Barrett has scaled multiple ventures focused on decarbonizing real estate and deploying clean technology, amassing an impressive track record along the way. If you're interested in sustainable developments, maximizing ROI, and making a meaningful impact, and in the process, saving money in the form of tax credits and incentives, you won't want to miss this conversation. Also, at the end, I'm going to share with you how I got paid to have a solar system installed on a small investment property. This is one of my personal investment properties, and it wasn't a free system. In fact, I paid to get it installed. So I'm going to share that with you and how I did it. To start, we are very grateful and honored to have Owen Barrett. Welcome, Owen.
Yeah, thanks for having me.
Absolutely. Let's start at the beginning. Your journey is quite remarkable. Can you walk us through your transition from working in finance to becoming a leading figure in clean technology and now in net zero real estate?
Yeah. Early on in finance, I recognized that I'm one of those strange people that love Excel. I'm a self-proclaimed Excel nerd. But I did not like the finance industry. So I really wanted to figure out a way to use sort of my financial acumen to do something that I'm passionate about, which was, protecting the environment. And this was all of this started kind of around 2009. And at the time, ESG, sustainability, like all these buzzwords today, they didn't exist. And there really wasn't like an industry. And so I tried to get jobs in sustainability, but nobody wanted a finance guy in sustainability. So I went to grad school for environmental science at UC Santa Barbara. And the hope was to like launch this career that was kind of half finance, half environmental science. And that's exactly what happened. I got a job as a corporate energy manager for a Fortune 100 company. And, it was my job to save the company money by saving them energy. And so fortunately, it worked out exactly like I wanted to. I worked there for about 3 years. And then, the entrepreneurial itch was just too hard to ignore. So I had to leave my corporate gig and go out on my own.
Okay, let's step back a little further because I'm always interested in this particular question and thought process that people go through. When was the time that you really discovered that you're truly interested in impact and environmental conservation?
Yeah, I think like a lot of recent college grads, I was kind of idealistic in what work would be. And then I got my first real job in finance and I hated it. And the thought of doing something that I hated for the rest of my life was like overwhelming. I could not accept that. And so I knew that for me to, I've always been a little bit of a type A person. I set goals, I do whatever it takes to accomplish them. I knew that in order to be successful professionally, I was going to have to do something that I enjoyed. And so I was super passionate. I still am super passionate about the outdoors. I spent a ton of time outdoors. I always have my whole life. And so I knew that if I could align sort of my professional life with one of the things that I was passionate about in life, I just thought it would lead to sort of a more enjoyable life. And it has. It hasn't been all fun and games. There's been a lot of stress and things that go with most careers, but I think ultimately it was the right decision.
Yeah, that's interesting because I have a very similar passion and interest to you in environmental sustainability, and that it started for me in residency where I had a month off. It was a month off. It was an elective month that we could pretty much do whatever we wanted. And I was lucky to get involved with National Geographic, and I was the physician on call for a trek. And the purpose of the trek was to traverse the United States longitudinally, only through public lands, and it was on the west side of the U.S. So I was on the northern team, and we started on the Canadian-Montana border and just like trekked through Glacier National Park and bunch of different parks. And I was outside. I was talking to people that had similar interests in, just being outside and having fun in that space. And it was amazing. It just opened my eyes to so many new things. And from that point forward, I was so interested in, in conservation and being outdoors. And that's how my journey got started. And it continues to this day in my work as well. So I think we're really on the same page there when it comes to finance and environment.
Yeah, no, that's super cool. I mean, that's one of the scary things about today too, is like, I have 2 little kids and then I have a stepson that's 17. And so I see my kids, I see a lot of other kids, and kids in general just spend less time outdoors. And I think if more and more people spend less time outdoors, this sort of dedication to environmentalism is going to potentially like peter out. And so I think it's so important for everybody to get their kids outside, because it's this like protect what you love sentiment. And if you don't love the outdoors, then you're not going to want to protect it. So that's one of the ways that we're trying to raise our kids, is sort of similar to how we were raised, just spending a lot of time outside.
Yeah. And I'll say one more thing before we move on to other finance stuff. But I, along the same lines, I took my kids to the Galapagos.
Yeah.
And my son, he's 10 years old, my daughter's 8. And it was such an amazing experience for them. It was an amazing experience for all of us. It was just unbelievable. It was beautiful. We saw this wildlife like up close, and they weren't afraid of humans. It was just amazing. And my daughter, like to this day, and we took that trip maybe like a couple of years ago. So she was like 6 at the time. She still talks about that. And her teachers tell us that she tries to incorporate the Galapagos in like every project that she does. Like every time she writes a story or something, the Galapagos somehow comes up in there. So it left an impact in it.
Yeah, it's awesome to see. Yeah. It'll be really cool to see how that like plays out throughout her life.
Yeah,
or if it does. Yeah.
Yes, absolutely. All right, moving on. So now we know that you're of this environmental interest, you have this finance interest. So you create an intersection there. So tell us about that intersection, how you're able to profit off some of these interests in sustainability, because many people think it's just extra money that they're spending and they're not getting an ROI off.
Yeah. So one of the last projects that I did for when I had a W-2 job was something called a fuel cell. So I implemented a fuel cell for the company that I was working for, and basically it generates electricity from natural gas. So it's not renewable, but it's much cleaner than the grid. And what's also interesting is it kind of serves as like a backup generator in the event of a blackout. And so the project costs about $10 million, but after tax credits and depreciation and incentives that are around at the time, I think it costs about $4 million, and it saved us $1 million a year. So, great project. Implemented it, thing went online, everybody was happy. And I got a thank you card from the CEO, the CFO, my boss, and my boss's boss that said like, thanks for the hard work, excited to, put another fuel cell online at a different site. And there's a $25 gift card to Starbucks in there. I was like, I'm saving this company $1 million a year. I got paid at the time about $100,000, and they give me $25. And I was just like, if there's any opportunity to like create value and share some of that value, like not even charge people up front, just say, look, let me do this for you, and then I'll take a piece of the value that I create. Yeah, I thought it was this really interesting opportunity that I couldn't turn down. So that's ultimately why I left that company and went on this like crazy entrepreneurial journey.
That's a funny story. So now tell us now what's going on now. What are you doing now, and how are you able to do that?
So I started a company called Lumeo, and it basically turned into this like an energy company for rural school districts in California. And that was really interesting for me because it was kind of my first like taste of success, having a small exit. And that exit then allowed me to get into real estate investing, which I've always been interested in, but I never had the money to do it. And I know a lot of people say you don't need money to do it, but you do need money to do it. And so I started to get involved in real estate investing. One of the first deals that I invested in, so I went right to syndication. I didn't want to manage my own deals. I was not interested in being the landlord. I just wanted passive income.
Actually, Owen, I'm going to interrupt you. Just before you go on, tell us a bit about Lumeo. What was Lumeo? And
so Lumeo was, it's technically called an ESCO. So it's like an energy services company. So basically I was like an energy management consultant for school districts that couldn't afford to hire a consultant or an energy manager. So big school districts have energy managers, small school districts can't afford it. And so there was this interesting opportunity where small school districts needed the same help as the big ones, but they couldn't figure out internally how to hire the expertise to implement these projects. So I just stepped in and said, I'll do all this work for you guys for free, but I want a piece of the value that I create.
Okay.
And it ended up being this like awesome success. It was like really win-win. Like everybody was aligned from the very beginning. So it was fun to do. And then, that led me to my first syndication investment. And just by like random chance, it was I think about a 200-ish unit master meter deal in Texas. And so I was looking over all the financials and I saw that the owner paid close to $200,000 a year in electricity. And so I had to ask the sponsor, what are you guys doing to eliminate this? And he said nothing. He's like, we just grow electricity at 3% a year. And I had just been trained to basically look at energy as an opportunity. So I couldn't believe he said nothing. And I ended up not investing in that deal. But I went on this fact-finding journey, talking to as many sponsors as I could about how do they view energy and what do they do about it, if anything. And they all said the same thing, which is we don't do anything. I was like, this is too big an opportunity not to go after. So I tried to start a company called Value Add Solar. The idea was to sort of consult for sponsors and plug solar into syndications. And that didn't work really well. It didn't work at all, actually. So then I decided if I want to try and decarbonize multifamily, I have to figure out how to buy multifamily. And that sort of led to the last 7 years.
So in the past 7 years, you started syndicating and becoming a sponsor of your own deals.
Yeah.
And tell us how that played out.
So, I was a little bit unique in that I was kind of coming at syndication from an impact perspective. Like real estate on its own doesn't really excite me that much. But if I can figure out a way to make money from real estate and decarbonize real estate, like that for me is really interesting.
Right.
And so I didn't want to start buying like duplexes because there's no impact. So I had to figure out how can I get impact fast. So I partnered with another sponsor that had a great track record, still has a good track record. And basically said, look, we can figure out how to bring some or all of the capital and make the project pencil better through some decarbonization strategies. But we need your like operational excellence because no one's going to trust that I know how to manage real estate. And so the first deal we did was a 64 unit property. Then we jumped to a 235 unit, 232 unit. And then that's when the market started changing a little bit. So we stopped going after value add deals and started buying like pre-stabilized deals from developers because we just didn't want to deal with the risk.
Right.
But yeah, so I chose partnership to sort of grow faster.
I see. Are you still in that partnership or have you expanded to do your own?
We are. I have a lot of things going on right now with the Inflation Reduction Act. And so it's just for me, but I'm kind of in a period of redefining what I want to do for the next 10 years because this Inflation Reduction Act is like the biggest opportunity that will ever come my way or anyone else's way in clean technology. And so I'm sort of trying to redefine what I think the opportunities will be for the next 10 years.
Okay, maybe let's talk about that. Where do you see the opportunities in 10 years?
Well, for multifamily owners, the Inflation Reduction Act is a huge piece of legislation. I think it's $400 or $500 billion. It's massive. And a lot of it is tax credits. So for instance, like the solar tax credit is 30% of the gross cost for the next 10 years. So that's a dollar for dollar tax credit. And that tax credit used to not be very attractive for people in real estate because we have so much depreciation that tax credits, like they're not exciting. But now the tax credits are transferable, meaning that you can sell them. So for like a real estate owner, if you install $1 million solar system and you get a $300,000 tax credit, pre-IRA, that tax credit was useless. Post-IRA, I can sell that for $300,000. So that to me is a huge opportunity for multifamily owners. And then there's going to be a ton of rebates, point of sale rebates for things that would normally get included in renovations anyway. So for example, if you buy a value add deal and you want to replace like old white gas stoves with new stainless steel gas stoves, if instead you electrify the units and then install electric stainless steel ranges, there's a point of sale rebate for the electrification and there's a point of sale rebate for the electric range. So now that component of your renovation basically became free, but you get the same rent bump. So there's all these interesting things that are about to become available for multifamily owners and single family owners or single family rental owners that is just too big for me to ignore. So I'm kind of repositioning everything I do around the Inflation Reduction Act.
Okay, so in summary, there are credits, there are rebates, and you can take advantage of this by, I imagine, just Googling Inflation Reduction Act and seeing what is available. Is there a particular website? How would you recommend that the listeners take advantage of some of these?
Yeah, so the tax credits are pretty simple because they're sort of consistent nationwide. The rebates are going to get rolled out state by state starting in 2024. So the best resource I've found is Rewiring America. I think it's rewiringamerica.org. And I would imagine that as the rebates start rolling out on a state-by-state basis, they'll start tracking like which states have them. Because, Florida, for example, said we're not going to take this federal money, and because Florida's being Florida.
Yeah.
But there's going to be a lot of other states that are like, sure, we'll take money to help our homeowners and our real estate owners. So it's just, you're going to have to pay attention to like where the money first starts flowing. And, strategically, we're going to try and make acquisitions in those markets because there'll be a competitive advantage. But it just kind of depends how far down the rabbit hole you want to go.
I see. And how do you see your company positioned for future growth based on the Inflation Reduction Act? What markets are you looking at? How do you see this playing out?
I think for me, I see the value in building out a company and sort of getting all the expertise in-house. But I also think that the flip side of that coin is you can scale a lot faster through partnerships. And so I don't really want anything to do with traditional real estate. So I see our future growth in continuing to partner with people and organizations that have the real estate operations and acquisition side dialed in, and then we'll bring the decarbonization side to help make the project perform better overall. And we're going after the same markets that, everybody else is, like strong employment growth, population growth. So a lot of Southeast and South, some Midwest.
Okay. And another thing that we've found potentially useful, we haven't used this type of financing because it's just unavailable in the markets we're in currently, but it's C-PACE financing.
Yeah.
Yeah. And for those of you that don't know, it's really low interest rate financing that is tied to your debt. So it can be transferred to a new owner of a property. If someone buys something from you, they can transfer that debt over. But it's a great way to use low interest rate capital, cheaper capital to finance some of these types of projects.
Yeah, we're actually in the process of trying to get retroactive PACE loans for 2 solar installations, which I always knew about PACE, but I didn't know you could get a retroactive PACE loan. So we got CapEx funds from our lender to pay for solar, and now it looks like we can get a retroactive PACE loan to get some cash that effectively replace the CapEx capital that we use to pay for solar. So it's super interesting, but it's also frustrating because it's not in every state and not every lender allows it. So it's a great opportunity, like if the stars align.
Yes, that is true. It's harder to use, but at the same time, if you are actively syndicating properties or purchasing properties and you are in a geographic area that allows C-PACE financing, definitely look into it because it can be part of your capital stack and it could be very low cost capital that'll just benefit you. And if you have LP investors, it'll just boost their returns.
Yeah, it's basically, exactly. It's like cheap prep equity.
Yeah, and you can use it not just for solar or renewable energy type projects, but you can use it for thermostats, for insulation, for roof replacements, things that you wouldn't even think of. So it's really helpful to look into regardless, because whatever type of renos you're doing, potentially there's something in C-PACE that could be used.
Yeah.
Excellent. All right. So, we spoke about credits. We spoke about rebates. What about tax savings and tax implications? Anything there?
Yeah, I mean, the Potentially. The tax credit with solar is huge. Like I touched on it a little bit, but this idea that the tax credit is now transferable it's amazing for like us because we install solar on all of our properties already. But the reason that it's so powerful is the tax credit. Initially, the tax credit was meant to basically reduce the cost of your solar by 30%. But that meant that you needed to have a tax liability equal to the tax credit. So with real estate, that never happens. Like you will never, I mean, if you're with bonus depreciation the way it is now, the way it's been in the past, like you'll never have a tax liability that's usable for such a large credit. So now what we're seeing is there's all these marketplaces popping up where kind of similar to like LIHTC tax credits, they're trading for like nominal discounts. So someone may buy $100,000 tax credit for $90,000 to $95,000 in cash. And then you really can drive down the price of solar by close to 30%. So it's just easier to make the numbers work and get the projects to cash flow. So I think that's like the most exciting thing from a tax perspective that's come out of the IRA.
Interesting. So when you're selling it in a different market, people are actually purchasing it for a discount. So that's where they save. So they purchase something at, say it's a $100,000 credit, they purchase for 90,000, they save 10 grand right there in that transaction.
Yeah.
And then the sponsor that's taking advantage of that gets that money up front.
Yeah. Yeah. It's really cool. And it's still, the whole market is like still pretty immature. A lot of these platforms, these like marketplace platforms, they're not really that great right now, but this has only been available since March. So like a lot of these marketplaces are going to get more, just the process is going to get a lot smoother as time goes on. Okay.
And you mentioned solar multiple times. Tell us a little bit more about solar and, the ability to install solar in different geographic areas, different apartment complexes, because you also mentioned a master meter unit, and those are very few and far between and older.
Yeah.
How's that work?
Yeah. So we recognized this problem with master metered properties as soon as we started buying them. I mean, the problems are there's multiple problems, right? Like you said, master metered properties are not that common. And if you do find one, they're generally pretty old. They're built in like the late 60s, early 70s. So there's a ton of deferred maintenance of them. But if you install solar on a sub-metered property, the installation is not the hard part. Like you're actually installing, so say you have a 100-unit property, you're actually installing 100 small solar systems. And each small system is getting tied into a tenant meter. And the installation is not that complicated. It's more complicated than a master meter deal, but that's not what holds everything up. What holds things up is now you as the owner have to figure out a way to manage billing 100 tenants every single month from the solar that's generated by their systems. And right now it's a very manual, tedious process. And that's a big part of that's a big reason that solar is not being deployed on multifamily. So we've developed a software solution to solve that, which is we're super excited about, because it's going to unlock sub-meter deals for us. It's going to unlock sub-meters deals for any other owner that's interested in solar. And so we're actually like putting, all the documents together to basically show the industry what it means. And the other problem with solar is it's a timing issue. So the best way to install solar for owners is at acquisition. So when you're going through due diligence and you're trying to come up with your renovation budget for, everything, interiors, exteriors, you should also be doing solar due diligence and then building it into your capital stack. And when you do build it into your capital stack, the solar alone has about a 16% IRR. But if you try and do solar post-acquisition, it's way harder because the options for commercial financing are just not that good. Even PACE, PACE is pegged to, like everything, it's pegged to the 10-year. So our retroactive PACE loans, if we get them, they're going to be close to 8%. And it's cheaper than other commercial financing options. But, everything, all interest rates are high right now, even PACE. So putting it in your capital stack at the beginning is the best way to do it. So it's a little bit complicated, but it adds a ton of value to your property.
Yeah. Okay. That's great advice. So when you are doing your due diligence and walkthrough and looking to acquire property, you mentioned look for the solar optionality. What about other types of energy efficient retrofits or other things you can think about, water savings? What else do you think about in terms of clean technologies?
Yeah, I mean, this is a tricky one, and it's tricky because of the split incentive problem. And this is a problem that's been, plaguing the industry from the very beginning. So with most energy efficiency projects, the owner has to pay for it, but the benefit goes to the tenants, which is not a good scenario for owners. That's all changing with the Inflation Reduction Act. So, I talked about electrifying and stoves, but something else that's going to be covered is insulation, weatherization, and new windows. So every time we look at a property, an old property, and it's got single pane windows, like a little part of me dies because I know that we probably cannot put windows in the CapEx budget because they're so expensive.
Right.
But if now the Inflation Reduction Act has a point of sale rebate to replace all your single pane windows with double pane windows, and it's going to cost a fraction of what it would have cost, we're looking at windows on every property that we're doing due diligence on. So from the energy side of things, energy efficiency, unfortunately, the best place to look is anything that touches common area load, because that's the only thing that benefits owners. So common area lighting, common area HVAC, probably the best place to start. And then once the IRA rebates turn on, you can start doing some things, some renovation items that otherwise would not have penciled out, like thermostats are included, windows are included, insulation, ceiling, weatherization, like all these things that I would love to do, but just add cost and don't add any value. That equation is all going to change once, starting in 2024.
That's great. A couple of things that we've implemented, there's a system called Water Sense. And what it does is it actually measures the amount of water going into different buildings. And if there is a surge or spike in water usage, it alerts you so you can go and track that and see where that's coming from and potentially take care of a leak very quickly. So that's something we've implemented. We've seen considerable savings there. We've retrofitted toilets, faucets, shower heads with low flow, and we've seen a ton of savings there. ROIs is very high. We've also done something quite innovative. There's a project in DC where we got this company called Zome Energy involved, and what they did was they installed thermostats for free. Not only just the standard thermostats, but also hot water heater thermostats. And their model was to play in certain energy markets. It doesn't work everywhere. It works in DC and certain other areas of the Northwest. Maybe actually Texas is a big energy market too, where it works. But what they do is when there's a peak demand event, they will drop the load of the entire building by turning up or down the temperature a few degrees. People don't necessarily even realize there's a difference if it's 1 or 2 degrees for a short period of time. They will stop the hot water heaters from running. And what that does is decreases the peak demand, and there's a considerable amount of savings there if you're looking at the commercial level. So they split that savings with us as a sponsor. So it's a profit sharing type structure. And so we not only get free thermostats that are controllable by the tenants themselves through their Wi-Fi, but it's also we get paid every year for working with them. So it's a very innovative and cool, type of project.
I think, that's awesome. I mean, I think, 10 years ago, you could buy any property and make a ton of money, and now it's getting harder. So I think that's going to force sponsors to get more creative. Yeah. And I think the ones that are sort of at the leading, energy is this huge opportunity that really nobody looks at. I mean, you guys are, and a couple other like select sponsors are, but it's not on anyone's radar. And so I think if the market continues to be challenging, sponsors are going to have to look at creating value in areas where historically they haven't.
Yeah. And And let me ask you also about different types of renewable energy, because we were focusing on solar, but there's wind, there's geothermal. I know it's not practical, obviously, to put a wind farm in an apartment complex, or dig for geothermal power. But what about, I've seen complexes, especially in Canada, where they have a central hydrogen cell location, and they power a whole community through that. So is there anything like that happening in the US, where there's maybe a wind farm or something like that?
There is, there's some. So I've never seen a wind farm or a windmill on a property, although, I bet it would pencil out. I think the harder thing is going to be permitting. Like the whole not in my backyard, but nobody wants a windmill in their backyard. But I think the unfortunate reality of a lot of sustainability stuff is that it's really expensive to retrofit, and it's far more cost effective to do a new development. Because you don't have to undo things that were done the wrong way, or maybe not even the wrong way, but just done the right way 20 years ago. We looked at the 64 unit in Tulsa, we looked at replacing our chiller boiler with geothermal. I mean, it would have been so cool, but the retrofit costs of doing that were through the roof. But if you instead put it in at the development phase, instead of a gas-fired chiller and boiler, it probably makes economic sense. So I think the really innovative things are happening at the new construction level, because it's just easier to get the numbers to pencil out. And then I think in the existing building world, at least until those tax credits and rebates are available at the state level, you do as much as you can. But at the end of the day, we all need to create projects that have an LP IRR that makes the project investable. So the unfortunate reality is you can't do anything unless someone suddenly comes and says, we only want a 5% IRR because we want you to do everything that you could do. Until that magical source of capital presents itself, you just can do the best you can.
Right. Absolutely. You mentioned zero, carbon neutral properties. Are you generating enough solar power to offset all energy usage in some of your properties?
So no, not yet. And the main reason is because so the master meter deals that we could find were in Texas. We found a couple in Phoenix, but we didn't end up buying them. But Texas has something called net metering on residential meters, but on commercial meters, there is no net metering. And so without net metering, any electron you send to the grid, so in real time, a property is using a certain amount of energy, and then your solar is producing a certain amount of energy. And usually in the summer months, your solar is producing too much, so you send it to the grid. And in a jurisdiction with net metering, as long as the sort of supply and demand equal each other throughout the year, you'll net out your bill. And so Texas has net metering on residential meters, but it doesn't have net metering on commercial meters. And when you have a chiller boiler, that's a commercial meter. So we found that the optimal size system in Texas on commercial meters is about a 40% offset. Now that we have this software that lets us do sub-metered properties, that's what's going to unlock the ability to do true net zero, which is super exciting. We just don't have a property yet under contract that we can do it on, but it'll happen soon.
Okay.
But that will be that's going to be, to me, and I'm a sustainability nerd, but that will be to date, there has not been an existing building that has been converted to net zero without carbon credits or carbon offsets. Every net zero pledge you hear from real estate companies today is riding on the back of carbon offsets, which is just illegitimate. It's not a real claim. And so the ability to do it for real on site would be a huge claim for anyone to do. So we're trying to be the first.
That'd be amazing. Practically, when you are putting a system like that on the roofs, do you have to wire each individual unit into the system?
Mm-hmm. Yeah, and that's a complicated part. So the installation is more complicated, but it was never the installation that held us up. It was always, how are we going to build tenants? Like, how are we going to monetize this $1 million or $2 million solar system?
Right.
So now that we've cracked that nut, everything else should hopefully get a lot easier.
Yeah. I think you talking about carbon credits is a good segue for me to talk about this renewable project I mentioned at the beginning, where I'm getting paid to install solar. So I'll just kind of talk about that briefly. I have a small multifamily unit in DC. It's only 3 units. Bought it about 13 years ago, and I had to replace the roof. So in DC, and you can look up, every jurisdiction varies, but in DC, when you're selling credits, they're called SREC credits. For each credit, it's a insane amount. It's much higher than anywhere else in the US. So the system I installed on the roof of that property, which was about 11 kilowatts, generated, I think it was 11 SREC credits for that per year. And each credit was worth, or is worth, around $350 or so. So, that is a substantial amount of money that we're getting from just the credits alone.
Yeah.
It may even be a little bit more than that, in fact. But we also took a loan to get the solar installed, which was very inexpensive financing. Also, when you replace your roof and you put solar on top, you can apply for solar credits, not only for the solar system itself, but also for the roof.
Yeah.
Because you're in essence replacing the roof to put solar on, so you still get that credit. So we got the credit for the roof, the 30 or 32%, whatever it is. The credit for the roof, the credit for the solar system, and we start getting the SREC credits. And basically, the SREC credits pay more than our bill to install that system. So we basically getting paid to install a system, and then not only that, the tenants get free power. I mean, it generates over 100% of what the use is for that building. So it was just like,
that's awesome. Yeah, it's amazing. It's amazing. Like, that's an awesome story. And when you can find those little scenarios where there's SRECs or there's like an incentive to install solar, it's incredible. The unfortunate part is, like, those things don't exist all over the country. So we got to figure out a way to make it cost effective for everybody where incentives don't exist. And that's like what we're really trying to push. But yeah, I mean, if you can get paid to install solar, everybody would do it.
Yes. Yeah. And some people, they're just unaware. They just,
yeah.
Like,
it's hard too, because you see so many like scammy ads, I'll get paid to install solar. A lot of times it's not true. And it's just like, so it's hard to sort of distinguish what's real and what's not.
Yes, that is true. All right. Well, we're getting close to time. I mean, I could go on and on. This is a great discussion. Let me ask you this question. If you could give one piece of advice to investors that are looking to make a meaningful impact to their investments, what would it be?
Are they active or passive investors?
Passive investors. Or let's just say active and passive. Let's say active and passive.
So I think, if you're active, I think it's a lot easier. I think we've talked about a lot of opportunities that you can do as an active investor. These initiatives make you more money. It's not like, let's do something environmental and take a hit for it financially. Like, it's good for the bottom line and it's good for the planet. So I think these investors need to sort of look outside the regular box of what they're doing, because there are ways to make more money from environmental initiatives. For passive investors, that's a harder one, but if someone's really, really passionate, I think they need to start asking these questions to the sponsors. Like, what are you guys doing beyond just renovating interiors and raising rents? And that's a harder one. Because I think a lot of passive investors just want to make as much money as possible. So I think the time will come, where that gets more and more important, and sponsors will start to stand out based on what they're doing outside of just generating returns. but I don't think we're there yet.
Yeah. I think, for passive investors as well, as they can look at other opportunities like hotels and industrial where, the sponsor's paying those bills. So there's more incentive to decrease the load.
That's a good point. But still, even on those types of properties, you don't see like the solar adoption in the US is 3% across multiple property types. So it makes all the financial sense in the world, but there's still this disconnect between like people making the decisions and people trying to sell these projects to decision makers.
Yeah. I think, for me, I would say to folks, consider solar. Look into it when you're doing your due diligence on acquisition. Look at all the credits we mentioned, credits, rebates. Just go online, do a proper search. Look at PACE financing. It's just an easy way to get cheap equity to fund some of these projects. And if you're a passive investor, look at what we're doing at Viking Capital and look at Rayven Capital. Did I get that right, Rayven?
Mm-hmm. It's joinrayven.com, Rayven with a Y, so Rayben. But yeah, we're set up. It's a crowdfunding campaign, so minimum investment's only $250. So we tried to open it up to everybody.
That's wonderful. Yeah, look at both of our platforms. Look at what we do. Maybe get some ideas. We're happy to have anybody talk to either one of us. I'm sure you guys have platforms for investors to talk about your projects. We do too. You can call our investor relations team anytime, and we can talk to you about this stuff. And if you want to talk to Owen, how can people get in touch with you?
The best way is through email. It's owen@joinrayven.com. Again, that's Rayven with a Y, Rayben. And then the only social media channel that I'm really on is LinkedIn. So you can find me there.
Excellent. Well, thanks, Owen. This was a great conversation. We hope to have you back in the near future.
Yeah, thanks for having me on.